Hey, what's up, guys? My name is Stock Source. Welcome back to Late Night Market Recap. Today is September 3rd, 2019, and let's get right into the news. First article is going to be about U.S. stocks slip amid trade tensions and weak data. Today, the stock market and government bonds took a hit due to weak manufacturing activity, which is the data set that we received today. Just look right over it. Right here is the data set. The threshold is 50. Anything below it indicates contraction. Anything above it indicates expansion. Currently, we're at 49.1. The last time this occurred, that it did break the 50 threshold, was in 2016. Before that was in 2008. Before that was 2001. So when it comes to predicting a recession, it is somewhat reliable. Anyways, investors are getting worried about the global growth and the global health as the impact of trade tensions and as they worry about the global economy in general as well. The Dow Jones lost as much as 425 points today. S&P dropped 20.19 points, and the Nasdaq fell 88.72. So right here, if I bring up DIA, DIA is an ATF, the off of the Dow Jones Index. So they lost 1.03% for the day. Now, some industrial giants like Caterpillar, they dropped $1.97 or 1.9%. Boeing lost $9.67 or 2.7%, and then 3M lost $3.08 or 1.9%. Now, such a red day led to investors flocking to government bonds and gold as they flee from riskier bets such as stocks. Now, in doing so, they increase bond prices, which causes yields to fall. The yield on the 10-year U.S. Treasury fell from 1.503% on Friday to 1.469% today, Tuesday. Also, gold settled at the highest points since 2013 April. On Sunday, the U.S. also imposed some tariffs on Chinese goods, including clothes, tools, and electronics, as China also imposed some tariffs on the U.S. on soybeans, crude oil, and pharmaceuticals. Later this week, investors are going to be waiting for the U.S. jobs figure, which is going to allow us to measure the impact of the trade conflict and how healthy the economy currently is. So that's going to be enough for this article. If you want to read some more, it's going to be in the description. Let's go for the next one. Walmart to stop selling ammunition for assault-style weapons. So let me put Walmart WMT as last time, top daily. This one down here is the weekly. Anyways, Walmart is going to stop selling some ammunition sales after two deadly shootings in its stores in the last month. And Walmart said Tuesday that we no longer sell short barrel rifle ammunition as well as all handgun ammunition in its stores. The policy is set to take effect immediately as long as the stores run through their existing inventories. The retailer is also has stopped for over 2 decades ago, has stopped selling handguns in all U.S. stores except those in Alaska, but now they will be ceasing to cut the sales in Alaska as well. Now, Mr. McMillan, the CEO, said the company has no plans to discontinue all gun sales as they have been serving the hunting community for several years now. Also, Walmart said last month that it sells around 2% of firearms and 20% of the ammunition sold by all U.S. retailers. Walmart also said on Tuesday that it expected its market share of ammunition sales will fall to around 6 to 9% over the time. In addition, Walmart is not going to allow shoppers to carry firearms openly inside of any of their stores, but will allow them to carry concealed weapons as long as they have permits. Right, so that's going to be enough for this article as well. Like I said, it's going to be in the description if you want to read some more. Next one is going to be AT&T names media boss John Stankey as CEO heir apparent. Let me bring up AT&T right there. Let me zoom in on it. Okay, perfect. That's daily. Now I'm doing weekly. Alright, so AT promoted John Stankey to COO and is going to be the likely successor to Chief Executive Randall Stephenson. Mr. Stankey is 56 years old and he will serve as president and COO starting next month. He will also report to Mr. Stephenson as he is the front runner to take over the job. Mr. Stephenson, the current CEO, Mr. Stephenson, hasn't indicated when he plans to retire, but once he does, it's going to be Mr. Stanky who takes over the job. Mr. Stanky got this promotion after his main rival or his competition, John Donovan, stepped down when it became clear to him that he wasn't in line to get that COO job. Now, Jeff McElfish will be taking over John Donovan, and he is currently the telecom division's head of technology and operations. In addition, we still have not yet determined what Mr. Stanky's compensation will be like for the new role. Right. So the next article is Tyson cuts full-year profit forecast. Let me bring that up as well. TSN. Perfect. As you can see right here, the stock price, it has now reflected this news, as this news came out at 7 p.m. ET. But maybe tomorrow opening day, it does reflect such a negative news. So Tyson lowered its earning forecast for the current period, citing that they have been receiving some short-term challenges that have been weighing them down. The Springdale Art Company said a fire at a Kansas beef plant and slower than expected operational changes in its kitchen businesses added to the challenges for Tyson's fiscal fourth quarter. Tyson cut its adjusted earnings guidance for fiscal 2019 to a range of $5.30 to $5.70 a share, which its previous projection was $5.75 to $6.10 a share. Now, the CEO, Mr. White, said he still remains optimistic for fiscal 2020, as he doesn't expect these big swings to happen in that year. For example, it would be this year's summer's big swing in corn prices. Anyways, this was a short article, but if you do want to continue everything I didn't highlight, like I said in the description. Now the last one is another short article, and it's about FedEx as they come under further scrutiny in China. Let me bring them up. FDX. Zoom in on them. Well, they have not been doing the best. Okay, perfect. Alright, there we go. So FedEx is facing another investigation in China. This time they are suspected of illegally shipping a parcel containing knives in Hong Kong. Now, pardon me if I'm pronouncing this wrong, but Xinhua news agency in Tuesday reported that a probe had begun into FedEx about the packages of knives, but offered no further details. A spokeswoman for FedEx said the package never left its origin city and was never delivered and remains with the authorities. That's what she said. Yeah, that's what she said. And also, authorities recently has launched an investigation into its failure to deliver packages to the Chinese offices of telecommunications giant Huawei. And FedEx is already under pressure, so this is why right here in the beginning it said it's facing another investigation, because they're being investigating for now sending these packages to Huawei, but instead they're redirecting it to the US, which FedEx said happened in error. I don't know if that's true, but that's what they're saying. Now, in addition, last month, the Chinese police said they were investigating FedEx over the discovery of a gun in a package sent from the US to China. So, let me just make sure. Yep, that's going to be for this article. But yeah, pretty much FedEx is not doing the best with China, and now they're under investigation for two things: sending Huawei Technologies partials packages from China to the US, and also for now having a parcel containing knives in Hong Kong. Anyways, guys, that's be the last article. We wrapped everything up, and we got all the news for today. And like I've been saying, if you want to continue with these articles, then it'll be in the description. But other than that, that's enough for Stock Source. Hopefully you guys enjoyed and learned something new. I'm out. Take care, guys.